years, the trade was simple: own big tech. Is it still that easy? Gene Munster is managing partner of Deepwater Asset Management and joins us now. Gene, thanks so much for being here.
Wonderful to be here.
So, Gene, what do you think? Big tech is lagging this year. Does the market have it wrong?
I think the market has it wrong in the sense that you should still own some of the big tech. This idea of just owning kind of a basket and not giving it much consideration, I think is going to perform less well. And I would kind of describe it this: if from a tech investing, which is my focus, the benchmark really is how the Nasdaq performs. And I think by owning big tech, you can outperform the Nasdaq, even though that represents about 40% of the Nasdaq. So it's a pretty big weighting there, but you can fractionally outperform. But I think that the real upside is going to come from these smaller companies, these companies that are 500 billion in enterprise value and less. And so I think that both of them are good to own. I probably bury the lead in that question is that there's almost a concept that we have to go to even before, like big tech versus small tech, which is where do you believe we are in the current state of AI? What inning do you believe that we're in? And if you take the approach that that AI is going to be impactful, that it's going to change the world, that it is going to be something that we're all going to use, it probably doesn't really justify being overweight tech. And I realize those are positive comments, but I think that that's kind of the baseline that most people are at. If you have a view like I do, that this is still very early, the second inning, that the transformation is going to be much more dramatic, 15% knowledge work unemployment. If you have that view, then we're still very early, and I think that whether it is the big cap or the smaller ones, you should still be overweight. And I'll just put it this way: is we have I'm a partner in a venture firm. We also have public-private funds. I would say that 70% of my net worth right now is in something AI related, and I think I'm probably underweight given the significance. So back to answer your question is that I think that the performance is probably going to come from these sub $500 billion market cap companies, but most of the big companies are still going to reap massive benefits in the next 5 to 10 years of what's going to be just some crazy innovation.
Okay, so I want to break both sides of that down, but let's stick with big tech for just a second. Which parts of big tech do you still want to own here?
So for the piece around, I would say that the kind of the next 2 years, you should still have some infrastructure ownership, like NVIDIA. Let's just take that as an example. This is a position we've held for a long time. About a month ago, we sold half our position. I realize this is kind of a half of an answer, but the infrastructure piece, I think, is still an important, if in fact we are still in the second inning, and if inference, which is really the thinking part of AI, is going to be thousands, hundreds of thousands of times bigger than the training piece, NVIDIA is going to benefit from that. The reason why we hold it. I mean, that's the easiest way to understand how investors feel about a company, is to ask if they own it. So we do still own it. The position is smaller today than it was. It's still a material position. But I think that the infrastructure opportunity is still significant, and I think NVIDIA is going to be a big beneficiary of that. The one area that I think is underappreciated around big tech in the next couple of years is what's going on with Apple and Google around personalized AI. We recently added to our Apple position based on what we think is going to be personalized AI and how that's going to influence Apple's business over the next 5 years. And we got a glimpse of it with Opus 4 back in November, and how that created the co-work and OpenClaw. And we're seeing these agents really think more on their own. We saw a glimpse of that, but it really got us to think about the concept of a lot of value utility if in fact someone can solve that problem. And that problem is, of course, allowing personal contextual AI that keeps your privacy. And so I think Google and Apple are still going to be big beneficiaries of that. And so those are that's another kind of theme. So we still see infrastructure, but again, personalized AI, it's one that you probably haven't heard people talking as much about, but we think that that's going to be really the center of the bullseye in terms of the opportunity for Google and Apple over the next 5 years.
So fair to say that the only Mag 7 names you'd buy here are Alphabet and Apple?
Well, we still think you should own NVIDIA. I mean, we take the approach, as most investors do, that if you own it at the beginning of the day, you're buying it. Whether you're not actually buying it or not, you are making a decision to own it. And so I think NVIDIA is another good company there. We do own Amazon. That's more in part for, we think that based on Amazon's perspective, it's a more compelling valuation. And we don't feel like that they have a very high bar when it comes to what they're going to do in AI. And so from that perspective, it seems that this agentic commerce opportunity could be a benefit to them. And of course, AWS is still this inference piece, if it's as big as we believe it will be. So we'd put that kind of in the infrastructure camp. I mentioned NVIDIA, but that Amazon piece around infrastructure. It's worth noting that we don't own Microsoft. We have not been buying any of the big software companies on this pullback. And so whole different topic around what's going on in software. And so I would kind of sum up our views is that just because something sells off doesn't mean that we believe that you should be buying it. You have to ask kind of a bigger question, what's causing the sell-off and at what point will it be remedied? And so that is some context. I just wanted to add that Amazon piece in there.
And you're not buying software because you're a believer that AI will ultimately disrupt that sector? Is that the case, or it's just not cheap enough despite the fact that it's beaten down?
We think that there is a reasonable probability, I'd put it at a third, 35% probability, that AI really, this vibe coding over the next 5 years really has a big impact in terms of companies' willingness to pay up for software and willingness to expand and willingness to continue to renew some of these contracts. But it's not like it's still a majority of my view is that these software companies are going to be around. The real substance of our belief on these seat-based models, so we do own software, we own companies like Snowflake that are usage-based models. We think the usage-based is going to do exceptionally well. But on the seat-based side, it's a view I mentioned earlier about this unemployment, the knowledge worker unemployment piece, is that if that does come to fruition, we're going to see an impact in terms of the number of users out there. And right now, it's not clear how companies like Salesforce are going to be able to charge for agentic seats, essentially. Our view is that they will use one human seat, will pay for it with Salesforce, for example, and then that human may have hundreds of agents that work within that license. And so our belief is that this kind of shift around knowledge work over the next 5 years is going to, at a minimum, create a level of uncertainty from investors, like when's the real impact going to happen? And that looming impact can be negative and can dilute the multiple. And so those are the two reasons why we haven't got into the seat base. But again, on the usage base, we have exposure there.
Okay, let's shift to the small cap side of things. If the next leg of this trade isn't the Mag 7, where should investors be looking? Where does the money in AI get made from here?
So there's an infrastructure piece around it. I think that is important the smaller companies. You think about like a Coherent, like a Vertiv, for example. These companies have performed relatively well over the past few years, the stocks have. But I think that these, just given the size of their revenue, they still have more opportunity to have these kind of eye-popping surprises versus like a mega cap versus companies that have hundreds of billions of revenue. And so I think there is that piece around it. I mentioned kind of the software usage side with a company like Snowflake is also within that. We're doing more work around energy. A lot of that's kind of coming on the private side. But I would say kind of collectively, we see that opportunity. We do have a ETF, the ticker is LOUP, that focuses on that 500 billion and less. And so feel very good about collectively, call it 60% of that ETF is related to AI that tends to be some of those smaller companies. And so I think, again, we need to come back to that, really that fundamental question. And this is the beauty of the whole AI trade, is just asking yourself, do you believe that this is going to be really impactful and change our lives? Or do you believe it's going to be like outrageously impactful? And I think that if in that fact that's the case, these smaller companies are going to have an outsized opportunity over the next 2 years.
I was actually looking at your Loop ETF holdings, and a good chunk of them aren't actually Nasdaq companies. Does that mean the Nasdaq is the wrong place for investors to be right now?
I think for people who, again, if you believe that this is, we're still early within AI, the Nasdaq I think is going to perform well. I think it'll do better than the S&P. I think that it'll do better than the Dow. I think you should be invested in, still be invested in equities. So that piece, it does hold. But there is like a nuance. Again, this is what we saw in 2023 and through really 2025 was kind of the basket approach really worked. And I think that there is kind of this nuance. We do own some companies that are outside of the U.S. And so there, to answer your question, I think the Nasdaq is still a great place to be. I think you still want to be long AI, and there is probably ways, we're trying to find like that kind of incremental step up from that baseline, which I think that baseline is going to do really well. I don't think this is a good time, for example, to answer the question a different way. I don't think this is a particularly good time to be invested in like bonds, for example. I think we're still very early in this growth phase.
Okay. I want to go back to Apple for just a second because there are headlines out today about this major Siri AI overhaul. It looks like potentially June, where they could be releasing like a ChatGPT competitor. How much patience do investors need here? Because it seems like we've been waiting for smart AI from Apple for quite some time. And is that what actually gets the stock moving again?
Definitely, it's the piece to really get it moving. I think if you can have some positive iPhone numbers, for example, or maybe the new Neo laptop does well, that can be a small boost. But really, for this stock to be re-rated, they got to show that they have competency in AI, and they, of course, have not done that. And to answer your question of how much time will investors give them, if you look at kind of the longer arc here, I think they will give them as much time until some other competitive AI device really captures the imagination of investors. And we haven't seen that yet. I mean, for all the talk, think about what's going on with vibe coding and how that just has had this profound impact in terms of how software has been written. As a reminder, as Anthropic in December talked about they no longer use humans to write the model. And it now is the machine is writing the machine. I mean, this is just like a profound shift. When you look at the consumer side, it hasn't happened. I can't point to any consumer device, any phone, any feature on any sort of AI phone, anything within Apple Intelligence today that is a must-have. And so this comes back to the question of how much time will investors give Apple? And I think the answer is they will give them, again, enough time until we see something else. It may be years before we see something else. If, again, a very shiny product comes out from OpenAI and Johnny Ive's team, I think investors are going to want to see results immediately, and if nothing comes out, then they're going to give them some time. And I think we probably are, absent Apple and Google. I think they're the two companies that can ultimately do this. So I want to just play this forward to June. The bar is high. Apple has set the bar high as of last WDC when they said that they're really going to crush it with this new Siri, which is code name for their new Apple Intelligence. And Mark Gurman from Bloomberg's reporting yesterday related to kind of some of the specifics about what we're going to see with this new Siri. It's really exciting. Like Siri as a competitor to your ChatGPT or your Gemini app, and really to be able to use all of your personal context within that. Like this could be just really a killer. But let's say that they fall flat, and let's say that they miss the bar. Undoubtedly, the stock would get hit on that. And down 10%, potentially 15%, it would be a big setback. But I think investors would climb back in and say, but just wait, they'll get it right, and because they typically do get it right. Again, long as there's not that killer other app out there, I think investors are going to give Apple stock a surprisingly amount of time.
Can you have a world in which potentially Apple, TBD there, but Anthropic, OpenAI, Gemini, Meta, in which they all succeed, or is this going to be a winner-take-all scenario?
I think that most of those companies that you mentioned will succeed. If we've really taken out what happened around the .com as kind of the playbook of how this is going to play out with AI, and I don't think that that's necessarily useful. Of course, what happened, we had leadership that was squandered, famously squandered by a long list of companies, and that aren't even around today, that would have thought to have been the leaders in 1996, for example. And that's kind of the angle against companies like OpenAI or Anthropic, and you're seeing just an incredible shift in terms of how OpenAI is approaching the market, shifting away from consumer more towards these enterprise type of use cases. But to answer your question, I mean, I'm in the camp that this is just going to be so transformative, and the need for intelligence at scale is going to be so high that all the companies that you mentioned, I think, are going to do exceptionally well. I think this is the new leadership. If you look at Meta and a handful of their executives, they redid their comp, and they have a similar target to what Elon has with his comp this over the next 5 years to get to a $9 trillion valuation. I mean, this is remarkable of I think, their confidence. And where does that come from? I don't think it's out of just hubris, ignorance. I think it comes out of confidence that they see that this can be a huge opportunity. And if, in fact, this is as big as I think it will ultimately be, the companies that you mentioned, I think, will all be successful.
Okay. All right, before we wrap things up and go to our this or that round, I have to ask you about Tesla, because I think of you as such a Tesla bull, yet we haven't talked about it at all in these 10, 15 minutes. Tesla shares are 20% off the highs? Is that a buy here?
I own it. I own Tesla personally. I can say we don't own it in our funds, and I just want to, as I'm a believer in Tesla, and we don't own it in our funds. What's kind of that angle there? What's the disconnect there? And it is a valuation sensitivity, I think, within our managers. But I do believe this company is one to own. I believe that what they are doing around autonomy is still underappreciated. And I would just welcome anyone who wants to get a sense about what's the state of what's going on here, to take Tesla up. They'll give you a 2-day test drive. You go in, doesn't cost you anything. They'll give you a Model Y with full FSD for 2 days. And I recently was using the latest updates, and there have been almost no interventions. That's very different than when I was using it 3-4 months ago, when I was getting interventions multiple times a day. And so my point is that when you think about Tesla, it just comes down to this concept of autonomy and robotics. I think that is something that it's hard to really wrap our heads around how big physical AI can be, but they're going to be a huge leader there. And it's often forgotten about their electric business. I still believe that cars need to be electric, that it's an undeniable truth. It's just simply a better way to power. It's more efficient. And ultimately, that these decisions that traditional auto has made over the past few years about pulling back their investments in EV, still investing, but at a much smaller scale, really creates an opportunity for Tesla. And it comes down to this, is that autonomy of the future is not going to be powered by gas. You're not going to have a gas-powered autonomous vehicle. That's that isn't how it's going to work. And so I think that these companies that want to participate in autonomy, they don't have the chops right now around autonomy. And then separately, they don't have the ability to build that EV infrastructure. And I think when you put all that together, And then you got the optionality value around Optimus. I mean, I think this is just going to still be one of the most exciting companies over the next 5 years.
So if I asked it as a yes or no question, would you be a buyer here, just below, what, $400 a share?
Yes,
The answer would be yes.
The answer is yes, and I think that the simple takeaway is, again, if you believe, like I do, that the transformation is going to be so significant, physical AI is going to be one of those growth phases, and Tesla's one of the leaders within that. And so that's why I'm a yes.
Okay, a perfect segue into our rapid fire this or that. It's quick questions, quick answers. This is your first time playing with us, Gene. Are you ready?
I'm ready.
All right, here we go. AI trade, early innings or getting crowded?
Early innings.
Tech valuations, fair or stretched?
Fair.
Next 6 months, volatility or breakout?
Breakout.
Small cap tech or Mag 7 for the rest of 2026?
Small cap.
I think that one was obvious. Big tech, buy the dip or trim exposure?
Buy the dip.
Semis, still leadership or peaking?
Still leadership.
Hardware winner, NVIDIA or AMD?
NVIDIA.
NVIDIA or Micron?
NVIDIA.
AMD or Micron?
Micron.
Beaten down software names, buy now or avoid?
Avoid.
A beaten down software name you would buy here?
Snowflake.
If you can only hold one this year, Apple or Alphabet?
Apple.
One Mag 7 name you'd sell here?
Microsoft.
Apple's next catalyst, AI Siri or services strength?
AI Siri.
Siri or ChatGPT?
Siri.
Bigger IPO opportunity, OpenAI or Anthropic?
OpenAI.
OpenAI or SpaceX?
SpaceX.
What's one AI stock you think still hasn't had its moment yet?
One that hasn't had its moment. I think Apple hasn't had its moment.
If you could only own one AI stock for the next 12 months, what is it?
Apple.
Finish this sentence. The tech trade works if...
There's less global conflict.
Okay, so on that note, this probably won't be a rapid fire question. We didn't talk about, obviously, the Iran war going on. At what point does that become a tech headwind and make you more cautious?
My sense, thankfully, is that this is going to get sorted out soon. But we are in a new world where there is, yes, like what's the best one to own? And I said Apple. If you're going to ask me what's the best private one to own right now, it's probably Anthropic. Not Anthropic, excuse me, Anduril. And this, I think we are entering a world where robots are playing a bigger role in conflict. And one of the biggest reasons why countries don't fight is because they don't want to have loss of life. Makes a ton of sense. As drones become more of a force, cyber warfare becomes more important, I think that you will see more conflict. And it's just the threshold to get into a conflict is less today than it was 50 years ago. And so my concern is less about what's going on in Iran right now and just more about like, this really lays the groundwork for Taiwan. Something's going to happen there. And at what point that is not going to be good for the AI trade.
Okay, well, we will continue the conversation hopefully with you soon and touch on that more. Gene Munster, Managing Partner, Deepwater Asset Management. Thank you so much. Really appreciate it.
Thank you. Ton of fun. Appreciate it.